We were just talking to Eddie Gabor about contrarian indicators, and right now we're getting one from Bank of America Merrill Lynch's monthly fund manager survey showing that the net allocation from folks that they talk to the equity market is now at a 2-year low. Look at that. So stocks have gone up very, very nicely since the start of the year, really since the end of last year. That final week of 2018 was a real face ripper for those who got caught short into the Christmas holiday. And people have continued to lighten up their exposure to the stock market while stocks have gone up, which I think lends credence to the idea of this being a hated bull market. It also kind of goes to that theme that we continue to hear about the modern world, which is that everything is awesome and nobody's happy. I mean, that's what this is saying, right? Everything is great in the stock market, and no investors are happy because they continue to decrease their exposure to the market.
But now, I wonder why that is.
I think it's a number of factors. My suspicion would be that people still remember the financial crisis, and they still saw the way the market behaved at the end of last year, and it scared a lot of people. We do have an aging, not just population, but significantly more aging, more aggressively aging investor base. People came out of 2018 and said, wow, that was a really crappy year from a stock part of my portfolio. I'm now 64 years old. Maybe I should be shifting some of my allocations around. And I think there's an aversion among a lot of investors who maybe have been made whole since the crisis, but are now really on the edge of retirement, who would like to be less exposed to the stock market overall. We had that comment from the CalPERS CIO that made the rounds of the last couple of days saying, I want to be more in private equity. We need more PE, and we need it now to hit their benchmark. And so I think from the institutional side, if you want to hit your benchmark, you can't just go into the stock market anymore. That's what they think. If you are an older investor, you don't just want to be in the stock market. You're looking at retirement. And we all know, right? Millennials, my friends think it's all a racket. I mean, I still have friends. These are educated people with jobs who are like, is the stock market a casino? Like, no, it's not, but this is the way that people think because they grew up in the crisis period.
Well, you're completely right. I mean, they keep talking about how much gas is left in the tank, right, of this bull market. But it's clear that even though a lot of analysts are saying, a lot of people are saying, look, it's got a lot more room to run, it's not strong because there is absolutely no enthusiasm about it. But I'm going to make a bullish case, right? Considering how well the markets are doing with such low allocation, think, right, if we get some of those people back into the market, how much, I know you're smiling at me.
This is the case, right?
But it is the
Guys
case.
on the sidelines.
Think of how much strength we can see popping out of that. I mean, we could see the Dow hit that 26,952 record high.
We could. The other thing is if you look at the way this market's behaved over the last, now it's 2.5 years. We've not seen a multiple expansion. The market went up because earnings went up a lot in 2017, or they went up in 18. They were anticipated in 17 because the tax law. But the multiple, which is a way to gauge sentiment around the market, has not expanded.
Yeah, that's certainly the case. But I wonder if once we start getting some clarity on a lot of the uncertainty that's out there, if that will change the minds at all. But it doesn't sound like it from what you're saying because it's more of a macro
Everyone
picture.
just hand waves at trade, but who cares about trade?
That's true. All right.